Let's get back to our top line conversation right now. Apple took the wraps off of its latest products yesterday. While investors weren't too impressed by the unveiling, consumers will soon have to decide for themselves if they're willing to hand over their cash for the new iPhone X. Let's get more from an investor reaction perspective. Let's bring in our featured guest, Diana Avigdor, head of trading at Barometer Capital Management. Diana, good to be with you. Thanks for coming in.
Thank you.
Let me get your thoughts on this. Well, maybe the product, but certainly the stock reaction. What do you think?
The stock has held steady, maybe a little lighter since the announcement, which tends to happen usually. The news were as expected. It was leaked out in every single detail way before, so there was nothing new in the presentation other than what was leaked. Traders that put this trade on for the trade decided to take their profits, and this is not the first time that it happens, that the stock sells off a little bit. So there's that, first of all.
Okay.
I will start by saying that we own the stock and we like it. And if I can go through a couple of things as to why. So everything was as expected. That's great. One of the negatives that it's possible why the stock is coming off a little bit and the supply chain is off a little bit is because of the delay. That was the one negative surprise, I guess, that usually in the past announcements, you can order the product right away or maybe a week later, and then the shipment starts immediately. So there's a 4 to 6 week ramp here, which makes some people worry that perhaps they're going to miss the full impact for the fourth quarter. As from an investment perspective, even if they do, although there are other products to take up the slack, but if they do miss the full impact of the iPhone X in Q4 17, there is Q1 18. And I do get that Christmas is an important season, and a lot of their hardware sale is into this fourth quarter. So to the extent that some people are disappointed, we believe, first of all, from a fundamental perspective, that the stock is intact, number one. Number two, a lot of the revenue and margin makeup used to be a lot of hardware. Apple is now highlighting how much services is part of the combination of this gross margin, which is a little less than 40% in total for the full host of products. So services include iTunes, iCloud, Apple Pay, all the kind of stuff that is going on outside of the just hardware.
Okay.
The combination is expected to shift towards services and less hardware per se. So should that come through, services picks up the slack. That business has been growing very fast.
But the hardware is still
Sure.
the significant portion of the entire company.
It is very important, and services is quickly ramping up. That's like saying, online shopping is 20% of the pocket, so it's not important because 80% is somewhere else. But the growth rate in that business is very, very significant. Wireless charging, it was a big deal. The touch and feel was noticeably different. I think that you guys talk a lot about the cost, and that is very, very high.
So what does that mean in terms of how many people will actually upgrade?
So I did a survey when I spoke to the BNN people and said, would you like to come on today? I phoned around the street. I phoned my American friends and I phoned my Canadian friends on the various trading desks. And every American I spoke to said, yes, for sure. Some Canadians I spoke to said, oh my God, no, this is too much. But the carriers no longer, they do installment plans. They don't subsidize the phone. They haven't subsidized it before. And then somebody brought it to my attention that the Samsung Galaxy, in the States and actually in Canada too, the last product cycle was not subsidization, it was installment, yes. So in your plan, maybe $40 is part of the hardware.
Okay.
So at $1,000 over 2 years, that's $40 in your monthly bill. So it may be accepted a little easier. And somebody also highlighted to me that the Samsung Galaxy Note 8 is $50 cheaper than the iPhone. So with all the infrastructure and with all the world that Apple products bring in, I suspect that it'll probably be taken up. The 8 is about $699, so for an extra $300, you're picking up the new phone. I'm not saying it's not expensive. Mm-hmm. It is. Mm-hmm. You know, we would have scratched our heads 10 years ago if somebody told you that you'll pay $1,300 for a telephone.
Right, that's true.
But in the context, which is always important, this is what's going on. So
you're a long-term holder of Apple. Do you trade it all? Do you trim it, or what do you do?
So you know how we work. Barometer is a very disciplined kind of. We follow the price action as well. It's very important to us that the stock acts the right way, and we want to be in the right neighborhoods with our portfolios. So for as long as Apple is acting the proper way, and technology is the right neighborhood to be in the market.
Okay.
We will hold on to it. We're very disciplined sellers. We believe that it's easier to buy than to sell. Excuse me. So to have a disciplined selling strategy is as important as what you're doing fundamentally to buy the stocks.
So at 159, is this a buy or a sell? Is this a buy or a trim?
It is a better buy than a sell. Okay. If I was pushed into one direction or the other, because. And this also fundamentally plays into our market view. We are positive on the market, okay, and we're positive on the sector. Okay. And so we don't believe that given what Apple has done so far, that Apple should be the one tech stock that you should be selling in a strong fourth quarter market for many reasons.
Which we're going to get to in 1 second. Sure. Before we head to commercial break, just to kind of wrap up the conversation on Apple. Is there a company out there that you think Apple should buy, or that you think Apple might be considering buying?
I'd have to think about that, Kathy.
Okay. All right. I'll ask you again.
Okay.
For sure. Okay, we're going to take a short break. When we come back, more from Diana Avigdor. We'll be right back.